Welcome to Suttmeier Technical Strategies edition of TechSpeak 101. This edition covers sector ranks and scores. So these sector rank and scores in our work can help provide the sector edge. And we evaluate the relative strength and momentum of S&P 500 GICS Level 1 sector ETFs using a multidimensional ranking approach. This analysis incorporates both short-term and long-term performance metrics to identify sector leadership and sector underperformance. Here are the key inputs. 1, tactical rank. 2, a 52-week rank. 3, trend scores. And 4, long-term trend scores. The trend scores that we use are evaluated on both an absolute and relative price basis, and we're using the S&P 500 as our benchmark. When we combine these indicators, it provides a comprehensive view of each sector's technical condition and trend durability across multiple time frames. The chart for the XLK, or the technology spider ETF, and the moving averages on the chart. Let's put the chart key on here just so we have it. You can see the 13, 26, 40, 200, both absolute and relative. So here's how they interplay. Each week in our Straight from the Chart blog on Saturday mornings, we publish our tactical and 52-week rankings. We do this in advance of the sector edge just so that subscribers get a glimpse into what the rankings look like for the incoming week. And you can see that energy, materials, industrials, staples, and utilities round out the top 5. So what's important to note on this chart, it takes the tactical ranks going back the last 10 weeks. So you can see where rotation has occurred or is occurring. And you can see where persistent leaders are and persistent laggards are. And you can see the shifts. What I think is really interesting is the improvement that we've seen in real estate from deep negative or the 11th ranking to the 7th ranking. And it's holding over the last 4 weeks. Technology has struggled after being in the green. In fact, technology was ranked first for many, many weeks before starting to deteriorate late last year into early this year. And financials have struggled. Here's how to read the tactical and 52-week ranks tables. Okay, the trend score. It ranges from -10 to 10 and incorporates the 13, 26, and 40-week moving averages. Higher scores indicate stronger absolute price uptrends, and we more heavily weight the longer-term moving averages. When you're in a bull market, you shouldn't really have many negative scores. You can see a recent shift from negative to positive scores on real estate as that sector attempts to build a big base. So there's a lot to glean from this. So how do you read these scores? If you have a consistent green, it's sustained leadership or relative strength. A consistent red is sustained laggard or relative weakness. Lastly, we also have longer term trend scores, and we'll define those here, but the way you read these charts is similar to the way you read the tactical trend scores. The longer term moving averages carry more weight. Looking at the relative rankings or the relative trend scores versus the S&P shows that you got some divergences out there. So this has given us a glimpse into rotations and what absolute trends look like. These scores should be a little bit more persistent than the other scores. Remember, these sector ranks and scores can help provide the sector edge. So the key inputs are the tactical rank, 52-week rank, trend scores, and long-term trend scores. And the level of these scores is important. The levels of the ranks are important, but what's also important is how those ranks move over time. I'm Steve Suttmeier, and this is Suttmeier Technical Strategies. Thank you.